Good morning, Wall Street winners. It is Wednesday, April 29th. And wow, today I have to say is a bit of a crazy, crazy day. I will get into details on that later in the video here, but we're seeing some things that are truly unprecedented. And I really don't like that word, but I'm using it to make a point. We're seeing that the markets fell significantly, 2 to 3% on Monday. And they fell because over the weekend, Trump threatened to try to remove the US Federal Reserve Chairman, Jerome Powell. And then they recovered Tuesday on the thinking that he wouldn't do it, but with no news out around that. Literally nothing other than commentary from many news networks and media outlets about how difficult that would be or why he shouldn't do it. No one siding with him saying he should do it, but understanding that his main goal is to lower interest rates. And then yesterday, after market close, alongside Tesla's earnings, after the market had recovered to almost the point where it was when when the market started Monday morning, Trump announced that he was not looking to get rid of Jerome Powell. So he did total 180 because it's clear he wanted to get rid of him. He was looking into it. He was talking to White House legal. He had talked about it behind closed doors. There's no doubt that he was looking to get rid of him. But then he came out on national TV because he loves media, and he made a statement that he does not want to remove him. He will not be removing him, but he does want him to lower interest rates and is encouraging him not to be too late, in his words. He calls him Mr. Too Late, also referred to him as a loser, but nevertheless, he's not removing him, and the markets took off. Then Tesla announced, and Tesla's earnings were the worst earnings ever. And because I think the tide rose with that announcement, it carried Tesla higher. It was just incredible. It was unbelievable that a company who missed their earnings and revenue by such a big number and big margin has actually gone up this morning and yesterday in the post-market, but this morning in the pre-market. So that's the thing that is boggling my mind right now. And that's just something to remember, that the stock market doesn't always make sense. Usually it makes sense, but there are days where it doesn't make sense. And today's a day where it doesn't make a great deal of sense. So you have to try to figure out how to work within that paradigm, and that can be oftentimes fairly tricky. So then you go back to your normal logic, and what I'm thinking is this is just a very short-term pop in the market based on some news around that we're looking at here that Trump is willing to negotiate substantial cuts to China's tariffs in a trade deal. So we'll see what comes out of that. It's really just a news headline right now. I don't think there's any details behind it or any actual negotiations that have been finalized behind it, but there are murmurs that he's willing to drop these tariffs down to more reasonable levels. What reasonable means and what that all ends up being remains to be seen, and we're probably still a couple months out from that. But that is what is driving things forward this morning. And then Tesla's earnings, puzzling. So if we take a look at where we are in the futures, you can see that everything is in the green. Everything looks like it's going to get off to quite a positive start to the day. If we move over to the Yahoo Finance app, the only thing that is down right now, and it's only just down 5 cents, is crude oil, down at 63.62 for crude futures. Gold is off as well, and the VIX has fallen, but it's still pretty high in the high 28s. Looking at health and retail, your retail has started to take off this morning. And again, I really don't understand this because retail is going to be one of the hardest hit, but it's having some pretty significant moves in the upward trajectory. You've got healthcare making some positive moves. Healthcare of America is 2 days out from earnings. It's jumping 4% this morning. Don't believe there's any news around why on that one. It's a bit of an anomaly out of the 3 healthcare orgs that we follow. JB Hunt has popped up a little bit today, maybe on thoughts that we won't be going into a recession, although I think that's pretty much inevitable at this point. And then oil. Look at this utility, Vistra out of Texas. Vistra is a utility. Utilities are typically stable. They don't fluctuate. Their beta, which is their correlation to the market, is usually in line. The beta here, 1.23, is a little higher than you'd typically see for a beta of a utility. But the stock is up 7.6% this morning. There's nothing in the market going on to cause a utility stock to go up 7 to 8% this morning. Con Ed, another utility, there's a great example. It is up 0.62. So that's more of a normal range for a utility to move. Its beta is 0.26. So very different. And then your oil companies, even though crude is down, the oil companies are up. And after we had horrific results yesterday from Halliburton. So we're on tap tomorrow to hear from Valero. So if I were holding Valero, and I do have a small position in Valero right now that I've had for years, I would probably consider selling Valero today if it is going up, because I believe unless it pulls a Tesla, which means it announces worse than expected earnings and revenue and a poor future forecast, but still goes up, which is an anomaly, I think Valero is going to go down tomorrow after earnings, because I think earnings are going to be underwhelming and possibly worse than expected or estimated. Then we get down into tech, and tech is just doing really well today. Again, for no particular reason other than the announcement from the president saying that he is not going to terminate or try to remove the U.S. Federal Reserve Chairman Jerome Powell. So you can see a lot of movement here, but again, a little crazy in certain areas. For example, there's no talk on semiconductor chip tariffs or anything of that nature, and yet semis are up, although they've taken a huge hit, so they do need to come back. You've got Lam Research, which is reporting today after market hours. It is up almost 4% in the pre-market, but well below its highs for the year, which are in the high 80s. You have Broadcom, which is up $8 this morning, or $7.73, $7.92 now. So that's a big move to the upside. And then Tesla, Tesla is up 7%. It was up 4% yesterday. It's up almost 4.6. It's up 7% this morning on horrific earnings. This to me makes no sense, and I would expect this stock to decline in the next 2 weeks because of those earnings. It's up on promises of a cheaper Tesla, but it's a cheaper Tesla that no one wants to buy right now because no one's in the market to buy Teslas. Then you've got Netflix. Netflix had a great day yesterday. I would have expected it to continue on that great day today, but maybe it just did so well yesterday that it's just holding its own right now. But I'd expect Netflix to get up to 1,100 based on its earnings, which were actually fabulous in comparison to Tesla. Scrolling down further, you got NVIDIA making a bit of a recovery again. Google, which is Alphabet, announces tomorrow after market close. It's making a bit of a comeback. That's a company that I think has a lot of potential because their Waymo division, which is the self-driving car division that they own, is way further ahead than Tesla's self-driving and Tesla's Cybercab. And they've released in multiple areas in the US. It's a phenomenal service. And I think that they're going to be first to market over Tesla. And that could cause that stock to take on Tesla's valuation metrics, which are like 100 times price to earnings, versus Google, which is a cash machine and it's valued at 19 times. So why aren't we seeing that same optimism built into the price earnings for Google around its self-driving division that we are for Tesla? There's a disconnect, doesn't make any sense. Not everything makes sense. TSM, one of really 2 or 3 of the only big semiconductor manufacturing facilities, fab companies for AI chips, and it's been hit super hard. Like, this was a $230 stock. It's now down at 151. It looks like it's going up about $7 at in the pre-market. Again, I would think this is easily a $250 stock. We'll see if it comes back, but we still have a ton to work through with all of these tariffs. The S&P yesterday, the S&P closed down below 5,200 going into the week, and it now looks like it's going to cross and get above 5,400 today. Just absolutely insane, the amount of movement here in the indexes in just a few days. To see the markets on relatively no news move 6 to 8% in the course of 3 days it's a bit unnerving. It's great for your Goldman, your Morgan Stanley, your JP Morgan, who are making a ton of money on the volatility, but all it is doing is moving your asset values up and down for large institutional investors who are holding their positions and aren't trading. So it's making it nerve-wracking for them to hold them on days when it goes down, because they don't know really why and when it's going to stop. Then we get into financials. We see that it's mostly green on the screen here. Raymond James announces tomorrow. I regret not buying this at 129 the other day because now it's at 139 going into the pre-market. But keep an eye on what happens today. There's no real reason for this run up, so it may be very short-lived going into the day and could turn literally on a dime or a social media tweet or truth from the president saying something to grab media attention, which he needs for his ego. So that's where we are today. If we look at our earnings today, you'll know that we have a number of companies announcing all after the market: IBM, Texas Instruments, Lam Research, Bank of California, and Raymond James. Again, I said this in the weekly setup call on Sunday. I'm a big believer in Raymond James. I think they're going to knock it out of the park on earnings, similar to what other financials have done, as well as, say, Charles Schwab, which is a similar business model. I am very bearish with Bank of California. I think with the wildfires there and everything going on, I think that they're going to get hit hard like Zion Bank and not have great earnings. I think Lam Research has potential, but with tariffs and everything going on and cutbacks, I'm a little risk averse, but I do think that the earnings will be positive out of them. Whether it jumps significantly remains to be seen. I'm not a big fan of Texas Instruments with the imposed tariffs from China on U.S. manufactured goods. And I think IBM should come out of this rather unscathed. They usually get through recessions pretty well. And they have a great dividend. So I wouldn't hesitate to put money into IBM for, for the long term. If you like the videos, please hit the like and subscribe button. Love to hear from you in the comments.